In our last lecture, we were looking at forecasting of exchange rates. And in particular, we realized that we could forecast. But then we realized that our forecasts probably are going to be biased. They're not going to be 100% accurate. So the question is, was that a problem for us? Which then leads us to the question, should we really be concerned about exchange rate fluctuations? And, kind of get mixed answers to that question. On one hand, people argue no, you shouldn't be concerned about exchange rate fluctuations because purchasing power parity exists. Exchange rates will adjust, and so will prices, and so there's no issues, right? The other thing is, let investors hedge for themselves. They've got all sorts of opportunities. Let them hedge. Okay, I get that. But on the other side of the argument is, we've already seen when we forecast that we don't necessarily, excuse me, we don't necessarily have all of the information necessary. And if that's the case, how do we hedge? We're not going to hedge completely. We're still going to get hurt. We're going to lose. The other thing is, exchange rate fluctuations are important to know about because creditors may require low risk and reward borrowers with low exposure to lower interest rates. So if you can forecast properly, it may be beneficial to you. Also, volatile foreign exchange rates may result in volatile business cycle fluctuations. If money changes rapidly, then demand may change rapidly. And we may see huge decreases in demand for our goods. Do we really want to have our business cycle fluctuating even wider than it already does? Exchange rate fluctuations can result in what we call transactions exposure. Transaction exposure measures the degree to which the value of a future cash transaction can be affected by exchange rate fluctuations. All right. So if you are an exporter and you are receiving payment 8 months from now, what is the probability that exchange rates will change and you may lose money on a transaction because exchange rates have changed so dramatically? So it's important for you as a business person to try to measure transaction exposure. And you can do that by trying to look at, in the future, what inflows of cash are you going to have, what outflows of cash of foreign currencies are you going to have, and can you look at by how much exchange rates would need to change by to make you lose money instead of make money based on these inflows and these outflows. You could also try to work it so that if you had to pay in yen and you were receiving yen, was it possible that you could take the money that the yen that you received and turn around and pay with the yen you have? You could also try to look at the exposure of the currencies that you're looking at. Is there some kind of a statistical analysis? Can you determine what range these currencies may fluctuate at? And try to use currencies which are less volatile, which are going to swing, move less. So really, as a business person, exchange rate changes are very important. So if we want to try to manage our our transactions exposure, what are some other things we could do? Well, the first is to try to consolidate all your expected inflows and all your expected outflows from all your subsidiaries and make one big calculation. If, here's where this idea of, are you getting money in from one subsidiary, but yet you have to pay another subsidiary in the same money? Could you use that? Could you counterbalance them? In this case, no hedging would be needed. All right. It wouldn't matter what the exchange rate was. If you're keeping the yen, you're getting in yen and you're giving out yen, then it doesn't matter what the exchange rate to the dollar is. You're doing everything in yen or pesos or whatever. The next thing you could do would be to try to hedge your exposure. Forecast your exchange rate changes and then try to protect against these. Now, some of these things we've already looked at, all of those hedging ways, futures contracts, forward contracts, money market hedges where you buy money market positions, your puts and calls, your options to buy or sell. All of these we've looked at previously. But there are some other ways that may be helpful when we're looking at hedging. Long-term techniques of hedging would consist of a long-term forward contract. If you can forecast in the long term, maybe a long-term would work. Currency swaps are another way. Currency swaps is simply when two companies come to an agreement for a predetermined swap of currencies. If a U.S. company is going to have euros coming in and a euro company is going to have dollars coming in, both in the next 6 months, we could determine the swap rate now, lock in something like that. We could have parallel loans, where you could have currency swaps and you can have a loan linked together. It's a possibility. Hedging, perfect hedging, as we kind of mentioned before, is not 100% possible. Right? So there's some other options you could do. Leading and lagging. Leading is paying a debt early. If you think exchange rates are going to change, it may be to your advantage to pay a bill early. Lagging is when you would pay a bill as late as you possibly can if you think exchange rates are going to change. You could hedge with a correlated currency. If you know that the dollar and the yen have very little fluctuation, and you want to look at another currency, is the British pound highly correlated to the dollar or the yen? You know, there's a lot of different ways that you can use other currencies to hedge. So you need to reduce the risk of losing money when exchange rates change. In another life, my brother and I owned an import-export business, and we worked for months to get a certain deal together. And just as we were getting ready to close the deal, exchange rates changed and the deal became totally undoable from our perspective. And we were too small of a company to do too much hedging and forward contracts and all that other stuff. We were too small. So we lost out on business because the exchange rate changed. So yes, exchange rate fluctuations are incredibly important, and you've got to protect yourself. All right.